Hi, good morning everybody. This is Nicholas Teo from CMC Markets here in Singapore. Just a few things to perhaps discuss this morning. About an hour ago, an hour or so ago, the Australian numbers or key economic numbers from Australia came out, namely retail sales and some of their trade numbers. On the whole, they are slightly below expectations. For example, retail sales forecast was 4.4%, and this is actually an increase from the previous month's read, came in at 0%. As a result of that, we are seeing a little bit of pressure on the Aussie dollar. Aussie dollar over here has actually bounced, had quite a good bounce after Tuesday's Fed, or rather RBA meeting, which kept rates unchanged. But let's just pull this up. We see this huge bounce on Tuesday, this green line down here, and this is a reversal of a 13-day sort of decline to test this strong support of around 75, 76 or 75.5, 76 level. And this is the third or fourth time that it's tested this. It's come up very sharply. Now we are seeing things pull back. It needs to be seen whether we will go back down to test this strong support of 76 again. But basically, nothing much I think is going to happen today, because the big economic number this week, or the big number this week, will be out tomorrow night from the US, and it will be May's payroll numbers. A lot of pair traders on the US dollar pair especially will be keeping a close watch on that. Well, not only FX traders, but bond traders for that matter, because bond market has actually been selling down quite significantly again after a sort of consolidation for the month of May. The bund, for example, as we see here on this chart, let me just pull this up once more. Well, this picture paints the story. I mean, after that big drop from mid-April all the way down to around the middle of May, and that consolidation that we had, the bond or the bund is being sold down once more as traders, or as the bond market prepares for a higher yield. And perhaps this is a reaction in anticipation of a hotter than normal payroll number, which may be announced tomorrow night. Remains to be seen. But not just the bunds, but the gilts and certainly the 10-year treasuries have also seen a similar sell down. Meanwhile, on the other side of the world, especially this side of the world, China, the A50s have totally tracked of their own mind. We see, after that big sell down that we saw the last week and a half or so ago, this pullback, or this buy up on Monday of 5%. After this 2 days of consolidation, we are seeing the A50 break above this 14,000, call it 14,000 level once more. It's early days in the trade, and obviously today, tomorrow we'll have big numbers, and as we go into the weekend, speculation would probably come up again with regards to policy announcements over the weekend, as the PBOC, the CSRC, or the government of China has been known to do, actually, from a weekend's point of view. So it's an extremely volatile market, and there are certain corners of the market calling for this as to be a bubble. And the latest to join the fray actually has been Bill Gross himself, the king of bonds. He's come out to say that Shenzhen looks like a reasonable shot here, for that matter. Whatever the case may be, there are still quite a few positives that one can argue to be a buyer for China from a long-term point of view. With regards to things like the Shenzhen Connect and MSCI admittance by some of the H shares, and also even the mutual recognition of fund flow, which allows Hong Kong funds to cross-sell into Chinese investors, and Chinese funds to be cross-sold into Hong Kong and overseas investors. So certainly a lot of things happening in the capital markets on there, which suggests that we could see things going even higher despite the bubble. Whatever it is, a lot of traders are actually very nimble, and I urge people to actually be actually nimble, trade with tight stops. Besides that, things are opening to a slow slumber, and I think it's going to pretty much be the trend for most of today as we wait for the payroll numbers tomorrow. Anyway, thank you very much.